Hello and welcome to today's 15 Minutes of Fire. I'm Bernadette L. Harris. I'm the President and CEO of the BTB Advisory Firm. And today's 15 Minutes of Fire is about financial statements. And the reason that I wanted to do this is because a lot of people don't understand, one, what financial statements are. Two, what do they tell you? So some of you may get your financial statements from your accountant, but you may not know what it means and what they tell you. So I'm going to talk to you about what they tell you. And then we'll talk a little bit about who uses these statements and why, like when they would use them and why. So I'm not going to make you an accountant tonight, I promise. I'm really just going to share some very high level information, just enough to give you enough information to be a better business owner. So your financial statements are generated from your accounting system. We did a session on choosing the right accounting system for your business. And so depending on the accounting system that you use will determine whether or not it has the capability of generating these particular financial statements. So the most common financial statements are the ones we're going to talk about tonight are profit and loss. It is also called P&L. You may also have heard it being called an income statement. All three names are synonymous. They all mean the same thing. Profit and loss, P&L, which stands for profit and loss, or income statement is all correct. The second financial statement that we're going to talk about is your balance sheet. And then the third financial statement that we'll talk about is a statement of cash flows. And so let's go really quickly through each financial statement and I'll tell you what they give you. So part of my list, I am wearing Invisalign. I don't know if you can see it. And it's a new set, so I probably sound a little lispy tonight, but hopefully it's clear enough to you understand what I'm saying. So profit and loss, income statement, P&L. This is the financial statement that tells you how much money you made, how much money you spent in your business. And so your P&L is a very important statement because it's going to, one, tell you if your business is profitable. It'll also tell you how profitable you are, right? And so it will tell you, let's say you made $100,000 and you spent $50,000 in expenses, your profit would be $50,000. So your P&L or income statement will tell you that your profit is whatever. It also tells you conversely if you have a loss. That's the reason why it's called a profit and loss statement, because sometimes you have a profit, sometimes you have a loss, and this statement will tell you that. It'll also tell you, depending on how much detail you have in your accounting system, it may tell you how much money you make in the various types of services that you offer. And again, this just depends on how detailed your information is. Oh, I got a little butterfly in here. I had my windows open today, so my doors open today, so I got me a little visitor. Sorry. So the income statement will tell you that. So one of the things that I use my income statement or my profit and loss for is to see like how much money I make in the various services that I offer. So many of you may know that I've been in business now for 21 years. And over those 21 years, the services that I offer in my business and the focuses that I've had in my business have changed over those years. And one of the tools that I use to make these types of decisions, as far as whether I want to continue a service, whether I want to discontinue a service, all of those kinds of decisions, I've made those decisions with data. So just recently, we have taken away standalone tax prep as a service in our business. In order to make that decision and understanding the impact of that decision, I studied my profit and loss statements over the years to see how much income am I going to let go of when I let go of this service, right? And so those are the kind of decisions that you can make. You can also look at your profit and loss statement to see where you're spending money and if there are areas where you can decrease your spending. And so you can see that. You can see if there are areas where you can increase your spending. So your P&L statement can tell you lots of things. If you sell a product, your P&L can also tell you what your profit margins are. So it's like after you pay for your goods, after you pay for your services, what do you have left to actually operate your business on? And so it'll tell you those kind of things. So that's their P&L statement. Then you have a balance sheet. The balance sheet is a snapshot. This is a summary of your accounts on a particular day or moment in time. Excuse me. So your balance sheet is going to show you a total of your assets. Assets are things like cash, accounts receivables, which is the amount of money that your customers owe you. If you are in a service business where you bill your customers and they pay you later, your accounts receivables is going to show how much money your customers owe you. It also assets are things that you own. So it could be your computer equipment, or if you own a restaurant, your restaurant equipment, or if you own a transportation company, your vehicles. And so any of your assets, or what we call in the accounting world, fixed assets, which means these are things that you don't replace them every year, right? So office supplies, you replace those every year. Computers, not necessarily. And so your assets, your balance sheet is going to tell you what all your assets are. It'll also tell you what your liabilities are. So liabilities are the things that you owe. So liabilities can be your accounts payables, which would be the recurring bills that you have on a monthly basis, your internet bill, your cell phone bill, your utility bills, those kinds of bills that come in on a recurring basis. If you rent a space, your rent, all those kind of things will show up on your accounts payables. This is also where, like, if you have like a loan or a credit card, or if you have payroll, you may have payroll liabilities. These are all things that fall in your liabilities. And liabilities, again, are the things that you owe. And then the third section of the balance sheet is your equity section. And the equity just basically shows how much you own in the business. So there's a formula. And we take your total assets, everything that you own, we subtract out your liabilities, everything that you owe, and the difference between those is your equity in the company. So if you owe more than you own, then you have negative equity in your company. If you own more than you owe, then you have positive equity in your company. So this is very similar to your personal net worth. If we take everything that you own personally, who you owe, and subtract it out, the difference is your net worth. It's the same thing in your business. Your balance sheet is going to show you all of those things. So when you look at your balance sheet, you can see very quickly how much money you have in the bank. You can see how much your customers owe you and how much you actually own. Then you can see how much you owe out. Who do you owe as far as your vendors? Who do you owe as far as your creditors? This could be credit card companies or banks that you borrow money for. And then you have the equity section where you see the difference between the two. So that's the balance sheet. The third financial statement that I want to talk about, and this one I'm not going to spend a lot of time on because the statement of cash flows is kind of confusing. But essentially, this statement just tells you or someone who's actually using this statement where the money came from and where the money went. So the statement of cash flows is going to show you if the money came in from sales, if the money came in from a loan, if the money went out to pay your credit cards, or if the money went out to pay a loan. It just shows where the money came in and came out. So it's kind of like, it's a statement of cash flow. So it tells you how the cash is moving in your business. Did you invest money in the company, or did you loan money to your company, or did you take money out of the company, or did you borrow money from the company? So the statement of cash flows just tells us the flows of the cash in your business, where it came from, where it went. Those are your three financial statements. Let's talk about some of the people who might use those financial statements. So I gave you a little bit of an example in the beginning when I said that I use my financial statements to make decisions on services, whether I want to discontinue services or increase services, things like that. And so you, as the owner of your business, will use your financial statements to make financial decisions. I always recommend that business owners use data to make decisions. Don't make decisions on what you think and what you feel. Make decisions on data. So your financial statements will tell you if you will give you the data so that you can make sound decisions in your business. Other people who may use your financial statements, if you are looking for someone to maybe invest in your business. I've heard people say, "Oh, I want an investor, someone to come in." Well, an investor is going to want to see your financial statements. They want to see the health of your business. Sometimes your business might be sick and they may be coming in to save it. And if they are coming in to save it, they just want to see how sick you are, right? And so your financial statements is going to tell an investor the health of your business. It's going to, one, the P&L is going to tell them whether or not you're profitable. And if you're not, how unprofitable or how big of a loss do you have. The balance sheet is going to tell them what you own, who you owe, and what the difference is. The statement of cash flow is going to tell them how the money is moving in your business. The same is true when you are talking about getting money from a bank. If you want to get a line of credit, they want to see your financial statements. If you want to get a business loan, they want to see your financial statements. Okay. And so these are the financial statements. Very high overview. I could teach a whole class. You could spend a whole 2 hours with me and we can talk more deeply into financial statements. But hopefully this is enough of an overview for you to understand and start looking at your financial statements. Now, if you're keeping your own books and when you pull your financial statements, you see lots of negative numbers or the numbers don't make sense, that is a good sign that your books are sick and they need to be cleaned up. But when you have solid books, when you have clean books, accurate books, you can pull these financial statements and they will give you the information that you need. So I hope that this video was helpful. If you have any questions, please put them in the comment. I definitely will respond and I will see you in the next video. Have a great one.